Hey, what's happening, guys? Hope you're doing well today. I'm going to go over my trades for the day. So I had a very interesting trading day. I actually made some mistakes. My basic mistake was not following my original plan that I initially had created for my trade. I didn't follow it, and guess what? I paid for it big time. All right. So if you're watching this and you're new to trading, if you're not new to trading, this is a common thing where you create a plan for yourself, and if you don't follow that plan, you are in fact asking for trouble. Okay, you might get away with it once, twice, maybe 10 times, maybe 100 times you'll get away with it, but eventually the market's going to make you pay. So the moral of the story is follow your freaking plan, okay? And just don't deviate from your plan. And I make videos about this stuff all the time, and I always break my own rules all the time. So basically, I had a set area to get out of the trade base that I had been in when the market traded at that level. I didn't hedge, I didn't reverse, I didn't do anything. In fact, I just left the trade on and I actually added to it. So when you're going to learn, like, this is just dumb stuff right here, okay? So the original trade was actually a good trade. The trade itself was fine. There was nothing wrong with the trade. In fact, the setup was there. Everything was there. It was great. But it just so happens that it had failed and I didn't hedge or do anything. So we'll go over that, what happened. So basically, guys, I was short calls on the SPY today, and I entered here at 9:52, I believe. Let me just get my trade log just to show you. So I'll show you all my trade log. So basically, this is what happened. So I got short these 292 calls in the morning, and I added in the afternoon when I should not have been adding. In fact, I should have been hedging around this time, okay? And what happened after that was I sat through a big amount of red, okay? And I literally, I was down, 40% of my account was down because I didn't hedge today. I did not hedge, and I messed up by not stopping out where I said I was going to stop out. So guys, follow your stop loss. Just use your stop loss. Look, I set myself a very wide stop on this trade. A very, very wide stop. It was a very strategically placed stop also, and it got hit. Therefore, I had to get out. My risk was managed, so I should have just got out with my managed loss. Instead, I left it on because for some reason, I tried to convince myself that the market was going to go in my favor from that point on. And, we don't have time to play with that kind of fire when we're trading, guys. So that's basically what happened. So anyways, I managed to sit through a whole bunch of red, and eventually the broker liquidated the position at 215. That was actually a great area to liquidate those short calls because I managed to switch my bias to bull gang and profit from these long calls, and I managed to sell them when they were pretty overpriced. So generally, this is what happened looking at the spiders chart. You can see that I entered the short calls here. And you know what? I'm going to use the replay function just to show you. I'll show you what levels I was generally watching going into today. And I was watching these 5-minute lower highs that were forming in the overnight session. We were in a 5-minute downtrend in the overnight session. So those levels I was referencing off of in the morning session. Okay, and you can see how we had a lower high. And then again, we rallied in the morning off the open. So I was looking to take a short off of these levels. And obviously, once we made it up there in the NASDAQ, those levels became support, and then we just kept moving higher. Very interesting psychology. So I might go back and analyze the actual psychology behind the market and how we went in sort of a downtrend formation, and then we ended up rallying all day and breaking the highs and kind of ending up pretty much near the highs of where we were pre-market. So yeah, so generally the thesis of my trades, I was using those 5-minute lower highs as a sort of stop point, okay? And the first stop I would have had would have been above here, 291.61. Above that level would have been my level to exit the short, okay? So you can see that I shorted the calls here, and they were about 1.5 points away. So I shorted the calls trading up here slightly out of the money. So if the market were to just kind of pull back, chop around, stay in a trading range, that would have been a winning trade. But what we had was this sort of pattern where we would come down, catch a bid near the lows, come back up to resistance, 291, come into a massive sell right there, but not break these lows again. See, catching a bit at the lows, and then again another time, another attempt to break resistance, and a failure, another time failure, and again catching the bid somewhere near the middle of the range, not breaking the low. So you can see we're making these higher lows here, but not necessarily seeing higher prices. So this is an interesting sort of development of price action that had occurred. And then what we saw was we managed to break it bullish. Now, this right here was a clear bull break above it, okay? And at that point, that was my stop loss right here, 291.60. That would have been my stop, and I didn't stop out the trade at that point. I did not stop out. So what I did was I watched, and I watched, and I watched, and I watched, and I added more to the trade here, when in fact, I should have been hedging. So During all this, you can see that the market is moving down, catching a bit, moving down, catching a bit. You see we broke by a penny there, straight into a bull, into a bull, into a bull. So at this point, if you're seeing this sort of price action, I was actually looking to hedge, but I didn't hedge. And I knew that I had to be hedged against more upside. So it was my mistake completely for not hedging, and I paid for it big time. I'm lucky I got out alive today, guys. Really, I'm really lucky I got out alive. Generally here, I was looking to get long calls. That would have been one possible hedge. So basically, there's two ways to hedge against a short call trade. It's either you short puts or you buy some sort of calls, potentially with a later dated expiry so you don't have to deal with too much time decay. But it depends on what you think, right? So one thing people forget about with options trading is that you have to consider the speed of the market, especially if you're long options. So if you're long an option, you want to be buying options only when you think the market has a higher chance of moving quickly in a direction. So if you think the market's going to shoot up drastically to take out some stop losses, then it might be better to get long than to short options. Whereas if you think the market is just going to be in a trading range, it makes sense to be short options versus long options. Anyhow, getting back to the trade, I didn't hedge, and guess what? I sat through all of this nonsense. So we broke higher. Great bull there. Amazing. And obviously at this point up here, we're extended, but still room to go higher. So that's the thing. The higher we go, it becomes bad risk to reward to hedge it. So really the place to hedge it was here when the risk to reward was slightly better. So I managed to sit through this whole kind of nonsense of price action, and look at how we broke higher for a second leg up there. And then we consolidated higher all the way. We managed to top out all the way at 294. And now look at how this price action behaved here. You can see that we moved up and we're sort of in a wedge, break to a higher high, not much follow through, break to a higher high, not too much follow through, and then another attempt to break to a higher high here, straight into a sell and break the lows of this higher low on the 2-minute chart. I was watching this, that right there. I said, if we can see a considerable sell at this point, that's going to mark our temporary top for the day. And in fact, it did mark the temporary top. So we came down here and we were chopping around this 293.50, 293.60. And I remember watching the bids here. Every time it would go down, it would refresh and catch the bid, refresh, catch the bid. I watched it do it at least 3-4 times. And then we finally broke it, came up for a retest right after we broke it, and then started to dump. So that's how the market behaves. In my opinion, it's very bad behavior to be buying breakouts or to be selling downside breakdowns. Very bad. It's just not a very professional way to trade, in my opinion, especially if you're trading the S&Ps, because you know that when you're trading the S&Ps, you know you're going to see a lot of fake outs. You know you're going to see a lot of failed breakouts, and that lead into huge fake outs type of thing. So generally, it's a rule of thumb that professionals tend to fade failed breakouts more than they will buy an upside breakout, for example, you know? Unless it's a short squeeze, right? If a short squeeze is likely, then it makes sense to buy an upside breakout. So it depends, right? You can see we got 2 legs down, a third leg down, and right here is where the broker liquidated my short calls. And that was a great area to liquidate the short calls, I admit. So thanks, Interactive Brokers, for liquidating my short calls at that point right there when we saw a lower low with no follow through on the 2-minute chart. And then that resulted in a bull right here. And at this point, I constructed the new trade. So I'm long the 294 calls on the SPY, right? They're out of the money, but there's still a chance that if we can see upside from here, that these calls are going to see some profit, basically. So what I did was I constructed a long bias trade here based on this low, and actually based on this low right here, based on the low of this pivot right here, which would have been 292.60 or 292.59. So what I did was I put in a conditional order with IBKR, and I put a market sell order on those 3 contracts on the condition for that market order to trigger only if SPY trades at 292.58 or 59 or so. And that never got triggered. We moved lower, couldn't break lower, and moved higher and squeezed out these shorts. And I managed to sell these contracts for profits to make back a lot of the losses from the short call trade. So I sold right near the top of this candle. As we were popping, on the pop, I managed to take off a contract there. And that was great. And then I watched it down here. And at this point, I actually moved up my stop to here, I believe. I moved it up to 293.25 would have been my new stop at that point. And we got a huge upside breakout because that's generally what we were thinking based on this sort of thing where bears enter, second leg down, bears are trying to enter, and then, oh, what's happening? We're going back up and we're going to squeeze out these shorts that entered here. And we got a nice pop here, and that pop allowed me to get out of some of these long calls. And again, when you see quick, drastic moves in the market, that's going to be your signal to get out, take profit on these long option trades that you're in, okay? So that was great. And at this point, I was watching very closely what happened. So I took off one contract here, again, for a pretty overpriced premium. Then I watched this and I said, okay, here, if we're going to get under 293.60, I'm out. Okay, because you can see here we moved down and then came up. And then if we're going to fail that level a second time, I'm going to be out of that trade. So I decided to cut it right there. And I cut it with a market order and everything. As soon as we broke below that, I wasn't playing around. And again, that was pretty much what marked our temporary top. And we sold off into the end of the day. The tape and the price action managed to help me at that point, and also having very tight stops on those contracts, okay? So I'm down $100 on the day, when I was actually down $300 on the day, okay? And just to give you perspective, that's like 40% of my account, okay? So I'm trading a small account, but you know, it's all about percent. Anyhow, guys, so I managed to get out of today alive, and I learned from a very, very dire, drastic mistake that I didn't follow my plan. Look, my stop loss was right here. I didn't cut the trade there, and I paid for it. Look, I thought that I knew what was gonna happen next. I didn't realize that I should have been hedging. So when you see opposite side trades occur in your trade, so basically I'm short the calls, market's coming up, higher low, higher low, higher low, break it to the upside. I mean, when are you going to hedge? When are you going to hedge? You need to hedge, okay? So that would have been a great area to hedge right there on this bullish engulfing. That would have been a fantastic area to hedge, okay? Again, right here, another kind of hold the bid, hold the bid, hold the bid, break higher. That would have been also a great area to hedge right there. And I didn't hedge, and I paid for it. Again, guys, I'm trying to approach these markets from the standpoint of being a trader, but also I want to approach them from a way of being almost like a market maker, where I'm kind of hedged no matter what I do. I want to have a lean in the market based on what the market is implying, what the market is telling you based on the tape. So I want to have a general lean, but at the same time, if the market's not showing clarity, you need to be unbiased. You need to be positioned on both sides of the market. And then when the market starts to show more clarity, you can start to have more of a lean in one side or another. So there's benefits to being short calls and short puts, and it's important to kind of know when to put them on. You have to just basically understand those probabilities, guys. So I'm going to leave it there for today. I wish you all the best. I'll see you tomorrow. And so the moral of this video is basically follow your plan. Once you've constructed a plan for yourself, stick to the plan. If you don't stick to the plan, you're asking for trouble, big trouble, okay? Take care, guys. Love you. Bye.